Good afternoon. Welcome to the TheoTRADE afternoon video. I'm Blake Young, and today is March 14th, 2024, and we're going to talk about consumer sentiment could foretell Nike's earnings future. And to do that, we're going to talk specifically about preliminary consumer sentiment, and we're going to talk about the Nike being a representation of consumer discretionary. But to do that, we also need to talk about inflation, CPI of this week, and PPI that happened this morning. So PPI is showing that we're continuing to see higher inflation, higher than expected, and so did CPI. But PPI can actually be indicative of next month as well. So next month's CPI could be being priced in higher next month because today's PPI was higher. So what it's telling us is that inflation remains hot. And we can see that from the price ratio down here at the bottom, looking at the difference between gold and the bond prices, gold being an inflation hedge, bond prices being considered a risk-free premium. What we're measuring that ratio, and the higher it gets, the more inflation you're seeing priced into the market. The fact is we are near record highs on gold versus bonds. As we're pushing higher, that should be an indication of very steep inflationary pressures on the broad market. And it's a little bit surprising not to see a bigger pullback. But we are seeing a pullback of about 0.5% at this moment in the day as an indication that we're trying to price in that inflation, which is also in turn indicating higher rates. And if there's higher rates, we should see consumers have less money to spend. If they have less money to spend, we should see things slow down. Kind of like what we talked about with Costco last week when the earnings, we were able to kind of determine where the earnings should go on Costco. But is Costco followed by consumer sentiment followed by Nike going to be more indicative and more of a catalyst to see the markets correct further if we miss again? So to look at this, let's go back and we're going to use this consumer sentiment chart and look at the previous month, what was reported and how did it report higher than expected, higher than the previous, and how that ties into what Nike has done. If we look at Nike and look at its earnings, we should be able to go back to the previous report, the report that was done that month and earlier. So going back into Nike, let's go find those earnings reports, knowing that Nike's earnings are next week. Not only, again, are we trying to predict what Nike is pricing in, but what we might expect on the overall market. As we're looking at this, let's go back to this date. Going into earnings, you can see price was climbing higher, 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 higher. And as we're looking at that price reaching these highs, how could we have known that it was going to miss and fall down? The fact is, investors waited until they got the report and then reacted. Back here, we should be able to say prices were selling off, selling off, selling off, selling off. And yet, after the report, they popped up higher and then continued higher. So significant jump higher. So looking back at those earnings, we're going to look at the earnings going back to this date. And that means we're going to go look at November's report on consumer sentiment. We're going to go back to, since this is September's earnings, we'd go back to August report. Back here, we'd look at June. So we'd look at May's report. We're just going to go kind of stair-stepping backwards into these sentiment readings back in those time frames. So the first one we're going to look at is we're going to look at November. And I want you to notice that November missed expectations, that little orange mark there. We missed expectations and moved lower. So consumer sentiment was falling and we missed even the analyst expectations. And so what this is telling us, the market was not only not as excited and positive about the market, but they were getting less so and coming in well under what analysts were projecting. And if we're seeing analysts predict higher and we're coming in lower, that is likely to be an indication of how consumers are behaving. No matter how the survey comes out, we're behaving more cautiously as we miss expectations, as we see numbers slide. So we had a warning in November that we were probably going to miss. If we go back to the next one, we talked about September's report, and we go back to August, September's earnings for Nike, go back to August, and you can see we beat expectations. Now we did come back below the previous month, but it was still in an upward trend, and they right through here, they beat expectations. So August is fine. We go back to the May time period, and you can see we missed. So let's look at those same time periods on the earnings, and we should see that same pressure building as we're looking at the report here. So as we're looking at the report, expectations were down and they outperformed, and what happened? We gapped up, closed higher. In May, what was the expectation? We were pricing in higher and higher, but we missed expectations and we gapped down. Let's go back to this one. So far, we're 3 for 3 going back to March. Therefore, we're going to look at February. You can see prices were rallying, and so we're going to go back and look at February's numbers. Going back to February. As you can see, there is January, there is February. Orange line was here, outperformed, came in higher. So we beat expectations in February, and price went up. We missed expectations and the prices went down. As long as we're seeing the setup, we're giving days and weeks ahead of time of what may happen next. That being the case, if we go back here to the preliminary University of Michigan consumer sentiment, and we're looking at this tomorrow morning, and we're going to see the report while the market is actively trading. Absolutely, we can pay attention to the market. We can watch for volatility around this event. But my thought is if we see that we're going to miss or beat expectations, look right here. We have a 77.1. That's the analyst's expectation. If it comes in higher than 77.1 and higher than the previously adjusted one, that should be very positive. It should show us consumers are confident, and therefore Nike is probably going to outperform on their earnings. If we see that this number has been revised lower and we miss 77.1, and especially if we miss 77.1 and miss the previous and we come in somewhere below 76.8, then I would say that's a complete miss on consumer sentiment, miss on the expectations, miss on the previous, decline month to month, and that should have a lot of bearish pressure and likely see more negative being priced into Nike and maybe not even seen until earnings. It might give you an entire week to plan that out. And I say a week, but next Wednesday. So we might be able to see next Wednesday show us the earnings were following consumer sentiment and purchasing behavior. We talked about this before, that if you take 4 times XLY or consumer discretionary, take out 3 times Tesla, it's trying to look at all the other consumer discretionary stocks and ignoring Tesla, trying to get as close as we can to 0 for last year. And just to see that the pattern looked pretty similar. We rose up through this time period, peaked here, traded flat here, traded flat here. Sold off aggressively on Nike, sold off aggressively through here. So I saw that Nike was probably a pretty good representation of consumer discretionary if we ignored the Tesla component. And then we can go through and we can kind of see that behavior happening here, higher highs, higher lows, and then we break out through here, and then we sell off through August, September, and October, August, September, and October. Over and over, this traded pretty similar until we saw 2024 start. In 2024, consumer discretionary shot higher and higher, and Tesla struggled. And so we saw that Tesla being taken out of the equation actually made consumer discretionary look better. While reality is consumer discretionary with Tesla in the equation matched a little closer in this time period since January. But overall, the rest of the year, they matched pretty well. I think that could be a good representation of what we're trying to find, is that Nike is a good representation, kind of like Costco, of what we can see in consumer discretionary spending, not just sentiment that includes Tesla. So as we've watched these moves higher and higher in Costco, and we've seen the moves pull back aggressively after earnings, are we going to see the same thing in consumer sentiment and in Nike? So let's take a look at XLY without Tesla being taken out. We're slowly pushing back down to these lows. And if we're seeing that increased pressure of inflation, are we going to see this be the early indication, and what we're expecting consumer sentiment to be the early indication of what is going to happen next? Now, I think that since we've adjusted this lower from last month, we're probably going to miss. I don't think consumers are saying, hey, I feel a lot better about things knowing that interest rates are climbing than I did last month. And so I think we probably are going to see a miss in consumer sentiment, and it may be an early warning for Nike on the 20th. Now, let me be clear about one other thing. Even though I'm saying that if consumer sentiment misses, I expect a gap down and a close down in Nike, which can give us an opportunity to trade Nike as an earnings trade, I'm not expecting the immediate response from the S&P 500. I'm expecting to see if that is the first rollover in the last couple of months in consumer sentiment to slowly be priced into the S&P 500. You can see that December we didn't see a major sell-off, just a little blip in that move. As we look back to some other time periods and we look at the previous earnings back into September, we moved up a little bit. We moved up a little bit after the earnings. We moved up a little bit after in the S&P 500, but it wasn't, again, an overall sudden explosive move. If we go back into the previous earnings going back to June, June gapped down and traded lower, and you go back to June, the same time period, paying attention to June 29th. And then you look over through there, and there was a little bit of a pullback, but again, it was delayed. I wouldn't say that you should expect the market to sell off, even if you do get a 10-20% gap down in Nike on a complete miss in sentiment. It will take time to feed into the S&P 500 because Nike is a much smaller component. In fact, as you can see, it's not in the top 10. It's not in the top 20. It's not even in the top 50. We have to scroll all the way down for Nike, all the way down to number 66 that accounts for 0.29% of the S&P 500. So it's not Nike's weighting that will slow the market down. It is that Nike is reacting to consumer sentiment and consumer demand, and therefore consumer buying behavior. So watch for tomorrow's numbers to report on sentiment as an early indication for Nike's earnings, but also for a long-term view of how is the consumer feeling going into or the end of earnings season and into Nike's reports. That can be an indication of how we're going to go into the summer and even through the summer and into the fall. Thanks for watching, everybody. We'll look forward to talking again next week.